Hello ladies and gentlemen, welcome back to another episode on this public investment playlist series. If you follow this channel for some time, you know the drill. Each month I publicly document what I'm doing in this public investment portfolio, and as always, just because you see here a random guy on YouTube, don't do the same decisions, don't do the same investment. It's just for entertaining purposes, and it almost works like a time capsule, so that in a few years I can look back and rewatch some of these videos and know exactly in what stage of my life I was and why I was making these decisions at that particular time. I have a different context, you have a different background, situation, so everyone has a different risk profile, so take everything that I say in this video with a grain of salt. Without any further ado, and sorry for this episode, I'm a bit tired. I am actually on vacations, but I am very jet lagged. I was coming from Mexico, I landed in Barcelona, then went to see some friends in Lisbon, and then I took a train here back to my hometown in the north of Portugal. And so this video, I don't have my level of energy, but here we are for the consistency every single month doing this episode. Even when the market is at all-time highs, or even when it is at all-time lows. Without any further ado, let's look at the portfolio performance so far. This is the total value that we have, but please consider that 6,000 is in cash and not in the stocks themselves. So I need to go down. Trading 212, this is the brokerage that I'm using, is always changing the layup. So the real one is this one, 6,900. So these are the value of my assets that I'm invested in the stock exchange. And we have right now an unrealized result of 25.4%. So if I were to sell all of my portfolio today, I would have this profit of 1,400, which is not bad. In some episodes, if you look back, I will see and open this portfolio and I'm in the negative. Other times I'll be in the positive, but remember, the strategy is long-term. DCA, I'll invest in the market tops, market downs. Eventually it will average out if I hope that the world will stay a better place and if I don't make any really bad decisions. You can see here the performance of my assets, and you can see that some are in the green, others are in the red. We have here an example of a company that went bankrupt. So here you lost all of your money. So this is a good reminder that there's always risk involved. But everything average, the majority of it, you can see the first ETF is the QDVE. So this is an IT ETF. Comprised of the biggest companies on the sector. The second one is 18.73%, so it's the S&P 500, and the third one is a VWCE, which is a very general ETF, so it has more companies, it has over like 3,000 companies. So you can see here the performance of these ones. The IT one is having a better return, followed by the S&P 500, and then the more conservative one. But these all comprise more than 50% of my portfolio because I like to have this basket of stocks. Then if you go to individual stocks, I have Google, Alibaba, Disney, JD.com, Meta platforms. I invested really when it was at all-time low. Intel, which is not doing very great, very good. Pinduoduo, Amazon, Adobe, which is down. And you can see here how everything is looking up. As usual, I have my pies here. Every month I create one. For this episode I haven't created, I will create one from scratch. I normally prepare it beforehand, but this is going to be short, and it's also a good reminder for new people that join this playlist to see how it's done in this platform. I'm sure in your own countries will also have, if you have this platform, is the same, but eToro also made some videos in the past, and the logic is essentially the same. Allows fractional sharing, so you just define a percentage. Imagine that you want to invest 100 bucks this month. You define, I want 50% for Amazon, 50% for Alibaba. It will split the two of them. And you can have I started invested only 40 bucks. So if I had invested all my money back in January of 2022 in this allocation of stocks, I would have a return of of 41%, which is very good in reality. But if I had invested all my money, let's look at okay, this has appreciated, this as well, this one looks okay. So if I had invested all my money in February 2025 in this specific allocation that I had before, it would be down 5.8%. But then again, we have a really long-term horizon. I don't need this money right now, and it's allocated at this specific time. I don't really believe in timing the market. anyway, but everyone has different strategies. So what was causing the drag on this one is because I had invested 10% on Adobe and it's 17% down since then, ASML and Intel down 20% since that time. Let's go back. So to create a pie, I will just come here, and these platforms nowadays are very intuitive. So add instruments. I already have a watch list, but if you want to search directly, you can just go here and put the ticker symbol of the stocks. In this case, the ETF that I invest in the IT sector, this is the ticker symbol. If I had to search for a specific company, maybe Google, I can have it like this. If I want to Facebook, I have Meta platforms here, and so on and so on. I normally recommend you creating a watch list because it's easier, and then you have everything that you need. So as usual, I'll have my focused ETF, the S&P 500, they are all accumulating. So that means the dividends that these companies are paying are automatically reinvested. So I don't get these dividends paid in the brokerage. For me, I prefer this. I don't have that much money. I don't think these dividends will make that big difference. I prefer it to be reinvested and compound over time later on a later stage in my life. Of course, if I had a lot of money and I wanted this passive way or passive income every quarter, every month, depending on the companies and the ETFs that you have, this could be a really good thing. But remember, also, if I had to do this, I would have to pay my taxes on dividends, which in Portugal would be 28%, but in some countries it might be a bit different. So we have here the FTS All World, the focus ETFs. I will invest also. I want to have my Chinese exposure, so I have Alibaba, Tencent, JD.com. I saw that Adobe was down. I'm going to invest also in Nestle, Kaspi to have a different region also as exposure, and I will also have Google because it is one of my main companies and I do believe in the motto, or even though that right now the price is very high. We are at $190 from last time I saw this morning, and I really like when it was 160. But this is the thing, in some months I will contribute more, in others I will contribute less, depending. I try to make it more or less stable on this platform anyway, for the consistency purposes. So I am going to have, because I don't have that much time this month to be researching. We are already at the end, at the last week, almost missing my streak of consistency. But the 50% of the portfolio, or over 50% of this portfolio, is going to be allocated to these ETFs. So we are talking about 65%, and then I will divide it across the other companies. Which, let me just dial it down a bit more. Let me see. Here I wanted 20%. This one 15%. All right, we are at 125, and let's go dial down this to 5%. 5%. Wait, sorry. 5%, and here 5%. So I'm equally distributed on these companies. And from past performance, we have an annual return of 11.42%, which is a bit over what gold historically gave and the S&P 500. But I do believe that we can, if it's this return, actually I'm fine over. If you put it in a compound interest calculator, you will see that this will be really good. But hopefully it will do better than this, since we have the IT ETF and we have here more companies that right now, honestly, they are expensive, but we're also sticking with the DCA strategy. I don't know, these stocks can keep climbing and then you miss out. So let's go next, if this allows me. Next, I want to do it manually. You can have auto invest if you have a fixed pie, and then you just put it for perpetuity. But I like to create a different pie every single month, even though some of the investments are the same, so that I mix it up a bit, or when I see more specific opportunities, maybe a stock crash somewhere. But in this case, everything is almost trading at all-time highs, and I'm going to invest here 300 if I can. 300, Okay, and you can see here the allocation also in nominal terms and in the percentages. So I'm going to hit next. I'm gonna give it the name 2025 July. Next, and we have fee. Okay, so not all of these orders will execute because the stock exchanges are not open at this moment, so only a few of them will execute. So let's wait a bit, and it's pending. So the ETFs are pending, and individual stocks, Google, Alibaba. So it's 5 o'clock here in Portugal. So yeah, the New York Stock Exchange is open. The other ones, since they are trading in a different stock exchange, they are not open at the time of recording this video. So not everything is being executed. So only $75 out of 225 will execute, and probably only tomorrow, next morning for my time zone anyway, they will execute. But then again, this will affect a bit the return because I'm contributing. So this didn't have any time to grow or fall, and you can see here that the return is at 24%. But then again, in a couple months, we should see this increasing or decreasing, and we will see even bigger changes. Thank you all for watching. I'll see you in the next episode. And if you're on vacation, enjoy your vacations. It's summertime, and I see you next time. Bye.